Hello everyone, good morning. This is Vikrant here from the Digital Fifth, and I welcome you for today's discussion topic on POS, basically on the PAP, which is PA's payment aggregators with physical POS devices. So we'll discuss some of the part of it on this. But before starting, thank you everyone for joining us. We would also like to talk about who are we and what we are doing for the people who may not know us. We do digital finance consulting. So we have done multiple projects which are deeply engaged with the customers. Also, we follow the practitioner's approach. And there are multiple projects from the strategy perspective, transformation, launch, de-risk, which is related to risk and compliances as well. So these are the basic services which we have worked on. We work with bank, NBFCs, large fintechs, as well as investors on some of the international projects, along with government enablers as well. So we have executed around 160 plus of projects with 100 plus of customers. Team size has grown to 30 plus as of now. So what we'll try to cover is on the payment aggregator side. What is a payment aggregator and what it is, how does it looks like, and where does it involve in the whole day-to-day transactions what we do. So payment aggregator is basically the one which acts as a middleman for a merchant, which helps them to connect to various payment instruments. So likewise, when we do payment aggregator, any transactions, be it online or offline, it has been considered as a middleman to connect between the two parties to complete the transaction. So that is where the payment aggregator connects in. So it is the middleman between the customer who is doing the transaction as well as the merchant. So it gives the merchant platform to connect with the customer so that the transaction can happen. So typically these, the payment aggregators do the operational work of managing KYC, call support, as well as doing the settlement related work and bank integrations. Along with that, they have multiple payment acceptance methods. So likewise, if we say today, there are payment card methods like card, net banking, UPI wallets, those have been facilitated. Also, there are multiple subscription services which have been provided by this payment aggregator along with the issuers in the backend. Because in India, it's typically not handled by the network, it is handled by the payment aggregators who are integrating along with the issuers. So also, they offer multiple value-added services like dashboard for online merchants, a validation API, because if you have observed, when you do transaction through any online portal, be it Amazon, Flipkart, or any other channel, it will be just redirecting you to the original screen. So that is where it takes care of redirection as well and validation API as well. So how does it looks like is whenever we say, for example, when we go to Swiggy to order the food, you would see typically this payment aggregator being a part of the enabling merchant on the online transaction, giving the options for doing the transactions like wallets, multiple payment methods like wallets, UPI, cards as well. So typically there are two types of payment aggregators which have been widely seen in. One is online payment aggregator, another is physical payment aggregator. Online payment aggregator includes entities which are enabling the online transactions on e-commerce platform as well as digital payment services. Physical are the face-to-face ones, which are again called as a POS-based transaction, point of sale. We'll drill down on the POS side. So there are multiple types of POS services which are there. One is the physical POS, the classic smart POS, which is also called as, which will have card-based and swipe or tap-based options. Typically, you see these in the market where you go to do the transaction and the POS machine will be available. There are MPOS are the mini version of these POS devices, which will have chip-based and swipe and tap options as well. Sometimes you will have a QR code also enabled on top of that. And the new entrant into this market is a soft POS service, which is an application which has been installed on top of your Android device, or which will help you to enable the mobile device itself as a POS machine. So it is been used it uses your phone's network as well as NFC capability to connect to the card, or to read the details of the card as well. So there are three parts of it, like POS, MPOS, and soft POS. So differentiator from the hardware perspective, maybe we have touched upon it. The portability perspective, if you see the classic devices, I mean the smart POS devices are a bit fixed. Those are counter based, because you need a network for the POS device, which is typically given through a LAN or a Wi-Fi. So largely these are been seen as a fixed counter-based devices, whereas MPOS, mobile POS are the kind of portable devices, so you can move it along with, but it with limited area, because it is connected to your phone's internet. So it, uses your phone's internet to connect to the internet and the global network as well. Whereas if you see soft POS is completely independent. It is a part of your mobile phone application, just as other applications. So it is totally mobile. So it can be used at multiple services, as well as the areas where you need portability. So if you see smart POS devices or classic POS devices, you must have seen in the kind of DMart or supermarkets, retail chains, restaurants as well. If you see MPOS, typically you would have seen this on the merchants and delivery agents, which where the delivery on cash on delivery is enabled. There they will use these devices. But soft POS are typically meant for the micro or SME segment of customers, which for them it will be value. The additional value for this is like you won't have to pay the rent for it, right? Otherwise, your POS devices or soft POS devices may involve a small amount of the subscriptions as well. So the journey has been so evolved much. Starting from the basic devices, which are the fixed, then introduced the chip devices with EMV, and then we had mobile terminal-based POS. And soft POS is a new entrant into this, and now there are UPI tap and pay options are also enabled. So these are the devices which have been put at the merchant location. You can, with your mobile app like GPay and all, you can just tap and pay using the UPI as well. So looking at the earlier, segment of this physical POS sale ecosystem overall, so we have seen a lot of POS terminal distribution had been a bigger game for the typically for the banks. RBL was one of them who were leading it, along with Axis and ICICI and HDFC as well. So the transaction flow perspective, when customers, okay, I'll skip to the detailed one. Yeah. So when customers reaches to the merchant, so he uses the payment gateway to connect to the acquirer bank. Acquirer bank is a bank who has been at the back of the payment, at the back of the merchant or the payment aggregator. So they enable the payment, particular payment merchant to be on the network and to carry out the transaction. So these are the banks who typically handle all the cash-based transactions, or the all cash flow for the merchant are handled by the acquirer bank. Issuer bank on the other side is the one for whom you are presenting the card. Say, suppose if I'm using a debit card, and if I'm using a debit card of say ICICI Bank becomes my issuer bank. And if I'm putting the card on the terminal of HDFC Bank becomes the acquirer bank. So money lies with the acquirer bank. Acquirer bank also have additional, I would say, additional responsibility of distributing that money back to the merchant. So that is where the differentiation happens between acquirer and issuer. The issuer's important role would be to authenticate the card, because the card, the card is connected to your account, and that account lies with the issuer bank. So issuer bank has that risk of authenticating that card and carry out that transaction. So overall on ecosystem, if you see, there are multiple split of it. Like there are omni-channel platform aggregators, if you can see here, who are providing these services. There are purely offline payment services as well, like Bijli Pay and Easy Swipe as well. There are payment gateways who are helping to connect this to the aggregator or to enable the merchant on the online transaction and authentication of the merchants as well. There are manufacturers and distributors as well who are enabling this overall ecosystem or POS devices. And of course, there are banks who are enabling it from the issuer and acquirer perspective, because for any online transaction to happen, the participation of financial institution is there because they have direct connectivity to the network as well as the bank account. There are networks which are heavily connecting to this all ecosystem through their own channels and their own network services. And also there are some services which are related to merchant onboarding or who are the food and street. Say for example, if there is I would say POS device you see at the merchant's end, you will see these POS devices or QR code nowadays at small shops as well, right? So who distributes that? So, and on the one side where banks provide this as a part of your current account services to these merchants, as well as there are some partners who are like Pick My Order, Buzzwords or Avian, who are helping them to distribute this QR code and channels to others. So this typically takes care of onboarding merchant, going to areas and identify the locations where the merchants are and distribute the QR codes or the POS devices to these merchants. How does the business model would look like for this particular industry? Is like this has been categorized into the multiple merchants, multiple type of merchants, because if you see, you can't have the same charging model for the small merchant and same charging model for the large merchant or the marketplaces, because each differs from the enablement perspective and overall their business areas, also the coverage of the particular merchants. So if you see, small merchants are being categorized who have typically turnover less than 5 lakhs, and they typically conduct the face-to-face transaction or the proximity-based transaction, which is also called as a NFC. And there are other type of it where there are medium merchants who are being categorized between 5 lakh to 40 lakhs of turnover yearly. And they have physical or online or both presence would be there. Also, there are marketplaces who are typically e-commerce platform like Amazon, Flipkart, what we use. So the audience perspective, there are entry-level offline merchants. So in POS devices, you would have seen these POS devices typically at these places because of obvious reasons that these are non-chargeable. Non-chargeable from the subscription perspective, you won't have been charged for anything. There are high-value offline merchants which typically uses the devices which are enabled on tap and pay or having the sound boxes as well, which will have kind of whatever we are today seeing in the market, right, where there are sound box. So these are been utilized by the high-value offline merchants. One more category in entry level, I think, based out here is a sticker as well. So there are QR code stickers as well, which are being distributed to entry level offline merchants. So, and enterprise merchants typically use POS devices, be it be MPOS, be it be the physical or smart POS on the ground. And online merchant, I mean, we have used this extensively, which on day-to-day basis, whatever transactions we do on e-commerce or any online channel platform, we do it through the online merchant or marketplaces. So there we get the experience of the payment aggregators in the back. I think we have discussed about this flow. Yeah, cost perspective, if you see, from payment aggregator perspective, typically on the physical side, there are regulation and compliance related cost. How does it covers is like there is a KYC. There is a very, I would say, major part of the merchant onboarding is merchant due diligence, which has been stressed upon by the regulator, because any merchant you are onboarding, you'll have to identify the type of merchant, what services they are providing, and what are the, I mean, according to that, the merchant category code has to be tagged to them. So that is again cost, because it can be done online. You have to do full KYC, then you have to do either biometric or video KYC, which becomes the investment for the bank who is acquiring the merchant. Also, there are operational and maintenance costs. So this cost comes when you are using MPOS or POS devices, because for the online or QR code based, there is very low maintenance as such, but from soundbox perspective or from physical POS perspective, there is a wear and tear which happens. So that is where the operational and maintenance cost have been recovered. So of course, there is a manufacturing cost. Because the devices which we are using for these transactions are being manufactured, and they have to follow certain certifications which which are the typically will take care of having what you can say, the fail-proof devices, so that they are fail-proof and fraud-proof devices. So that is something, the cost which manufacturer has to take care of. And of course, the merchant onboarding cost, we talked about the feet on street players as well. So who takes care of bringing that merchants on the platform and onboarding them to the overall ecosystem. Technology infrastructure cost is the one, and network cost, because networks binds all this ecosystem and participants together. So any transaction happening between merchant, acquirer, or issuer is flown through the network, and the network charges on the both sides, on the issuer side as well as on the acquirer side as well. So how does the distribution happen? Distribution of POS happens through the outsourced feet-on-street network. We talked about some of the players as well. There are in-house direct sale agents as well. So who do companies' salary teams are there who finds the merchant, KYC gets, and then enable them on the POS devices. So here the cost might be higher, but you will have better controls as well as cleaner data as well. Bank and NBFCs are also play into it, where the partnership is done along with the banks and NBFC partners. Here the acquisition cost will be lower, and it can be also offered as a part of the, I would say, upselling of your current account product at certain places. Just touching upon small regulations, what are the key regulations have been there for the payment aggregator? So there are regulations based on capital requirements for the customer grievances and redressal from that, and dispute management. There are governance models as well, frameworks which has been defined for the payment aggregator. So in India, payment aggregator again is a licensed entity, so you have to follow all the relevant regulations to be complied with, and all the technical regulations as well to be complied with. There is recent regulations as well on the settlement and escrow management, because how many accounts a payment aggregator can have with the bank, escrow accounts with the bank, that is also limited under these regulations. Regulations for the agents, that who will be the agents, how will they be covering the onboarding part and KYC part and merchant due diligence part. Of course, there is from the storage perspective, because all the data is to be stored within India, there are SAR regulations which also applies on this. And there are regulations on the merchant onboarding, which takes care of merchant due diligence, or take care of merchant providing them the services or add-on services and settlement, etc. So with this, I cover this topic on the maximum extent. So we'll be happy to discuss offline if there are any additional clarifications required from our side. Yeah. Thank you.